We're all now in a very strange and extraordinary situation, at least for post-war times. We look at a global lockdown that confronts us with who we are as human beings, and it confronts us with our economic and social systems. And the good news is that so many people have shown their humanity and even bravery in the fight against the disease. We think about the healthcare workers and also those who help the people who have suffered from the loneliness of lockdown. Well, the bad news is that it is now crystal clear that our economic system is fragile and insufficient to deal with this crisis. Our system is built on the assumption that everything is always great. Now, we are not in such great circumstances, and we can see the consequences of that. As Salux, we have been arguing for change already since 2012. We understood that we cannot continue with a lopsided economy that extracts ever more money and resources from our real economy and our environment at the cost of people and planet, and at the cost of many small and medium-sized business. We have pleaded for years for an economy with wealth and power is not so lopsided allocated with a shrinking group of a happy few at the cost of everyone else. We cannot continue like this. The expectation from shareholders that it is possible to extract ever more profit every quarter from companies is putting small and medium-sized businesses and families in the extreme pressure, and many become victims of this extraction model. We as Salux, we argue for a relational economy based on mutuality. This situation, as we have now, is a disaster for many people who will lose their job and or their business. It's also an opportunity to evaluate and to see how we can do better from here on. That is why we are delighted that all our speakers are here, Dr. Paul Mills, Rosen Ivanov, Patrick America, Timo Plutschinski, Arleen Westerhof. We thank them all for sharing here today their expertise, their experiences. And I thank my colleagues, Christian and Gabika, for helping with the technical side and setting up this program. First, we will go today through the speakers. Each of the speakers will have a short presentation. After that, there will be a Q&A session. I will explain how that works when we start with that. For now, I have the honor to introduce the first speaker, which is Dr. Paul Mills. Paul joined the UK Treasury after completing his PhD at Cambridge University on non-debt financial thinking and systems, and he has always been working on that since ever since. He specialized in government and debt management, financial stability, and analysis of regulation. He joined the IMF, moved to Washington to work on global financial stability since 2006 and the US financial system. He returned to the UK in 2009 to head the fund's London office house, focusing on financial markets and market surveillance and stability analysis. He left the IMF early 2017, so he has a great expertise on that level. And we are so happy that Paul is with us today and is willing to share his expertise and experience. Paul, I give the floor to you.
Okay, thank you very much. I'm going to very briefly go into the policy response to the crisis. I've been asked to touch a little bit on what the IMF has been doing and saying, and then just throw in a couple of questions about where we're going and a few ideas on policy. I'm now going to try and share the screen for my slides. Is that going to start? Yeah. So Just to note, we had a weak growth backdrop when the crisis hit. We're now forecasting GDP declines in advanced countries of between 5 and 10%. There's been a very sharp drop in global trade, as well as energy, particularly oil. Initially, you had one of the quickest drops in equities in history, and obviously credit spreads blew out. Equities have subsequently recovered. This prompted absolutely unprecedented monetary stimulus, particularly from the Federal Reserve. So thus far, we've had 6 trillion in total. I'll just show you what that is graphically, just to show you what the Fed in red is doing or plans to do compared to what it did in the last decade of quantitative easing. We've also had vast fiscal stimulus with loan guarantees. In total, that's 8 trillion. There's some of that is guarantees or payments being delayed as tax holidays have been put in. Just to note, the focus has been on corporates and households. This isn't yet a financial crisis, so banks have not really been helped. Obviously, there's been a lot of liquidity given. That shows you the scope of the fiscal interventions in some of the major countries. Biggest fiscal injection has been in the US and then Germany. Fiscally constrained countries like Italy and Spain have concentrated more on guarantees and postponed payments. The IMF has sort of speeded up its approvals process. It's given $28 billion thus far, primarily to poorer members, particularly in Africa. I think 10 billion of that has gone to Africa. Over 100 countries have requested help. There's been a little bit of emergency debt relief to the 25 poorest countries. The IMF has $1 trillion in loan capacity, of which most of that is still available. And its last global growth forecast, the IMF, compared to the financial crisis over 10 years ago, when the IMF was relatively slow to reduce its global forecast, this time it's gone very rapidly and said there's going to be an absolute drop in global GDP of 3% this year. That's the worst since the 1930s by a long way. But it forecasts quite a rapid recovery, what we call a V-shaped recovery in 2021. Although they say over the piece there will be a $9 trillion decline in global GDP as a result, as you can see, they're still forecasting quite a rapid recovery. I have my doubts about the rapidity of that. Now thinking about what financial markets are thinking about, how fast is the recovery going to be? Is it going to be that V-shaped recovery, or is it going to be much more prolonged? People are grappling with the idea of, is inflation going to come after the immediate price falls? So I think just about everyone's seeing inflation is coming down quite sharply because of the oil price and so on, unemployment going up sharply. But with all the money printing and loss of supply capacity, is that going to lead to inflation in the medium term? Equity markets have recovered somewhat, but people aren't sure about the quality of the recovery. And then we've got this big question about how do we pay for it all? And already in the UK, you're seeing the Prime Minister and the head of the Church of England saying we don't want governments to cut spending as a result of this crisis. So already you're seeing calls for, yeah, the debt's going to go up sharply, but we don't want the current generation to pay for it. And I suspect politically there will be a choice of continuing the playbook that's happened for the last 10 years, which is rather than get debts down, we print a lot of money and the central banks buy the debt. Question then comes, do the Fed, the ECB, Bank of England follow the Bank of Japan in actually buying equities next? That's the next step you go down if you're into mass asset market support. And then we've got the ongoing issue of how can Italy, who was in recession before this, how can they continue to remain solvent when this is going to add lots to their existing high levels of debt? And can the ECB buy enough to keep Italian spreads down? The virus has exacerbated existing global trends. So already at the beginning of the year, global activity was slowing, trade growth had slumped because of trade wars and other things. The China-US Cold War in rhetoric and trade relations has been ramped up, and you're now seeing global supply chains disrupted both by the crisis, the virus, and policy response to it. Medical supplies have been kept at home rather than allowed to be traded. We've seen energy price collapse and in other commodities, and that's going to mean fiscal stress for many of the producers. And I mean, what's perhaps most serious for the poorest in the world is that global supply chains are being disrupted by the crisis of the virus, but that is coming on other pressures. So swine flu has wiped out 25% of the pigs in the world. Africa and Middle East have suffered locust plagues late last year, early this year, and we've entered into a solar minimum that could mean that we've got poor harvests coming for the next few years. So you've got sort of the virus has added to existing stresses that were already there. What might we do about it? Well, my hobby horse is about debt, and we've got a lot of these problems because we've got highly leveraged economies and governments, and we underuse equity. So as you can see on those slides, those points, I'm generally trying to approach the crisis of trying to get rid of the debt burden and switch it for equity when possible. So Christians have often talked about, oh, we now need a debt jubilee, although jubilee is not the right term, it's a year of debt cancellation to remove some of the debt burdens. But that's very dangerous because you don't know where the costs are going to lie. And so a debt reduction across the piece could well endanger the whole banking system, that then we'll need bailouts. So I suspect we're going to continue to Japanify, low growth, low inflation, central banks buying lots of debt to keep the whole thing going. We should be seeking to reduce debts and switch them for equity or wipe out debts through fast track bankruptcy and personal bankruptcy processes. So we're not keeping excessively indebted companies going forward that have no future. That's a very hard policy message, and I wouldn't want to be in finance ministry doing it. But I think you've got to start saying government has to start taking equity stakes in rescued companies rather than load them up with debt that they can't afford. We ought to reform the banks so that some of those credit losses can be passed on to savers. So those are my points. I'll now stop sharing that and give the screen back. All yours, Johannes.
Thank you so much, Paul. I think that was very clear. It's also slightly frightening, but we know it's a frightening situation. I think that one thing we can see that this is clearly giving a global picture of where we are and where the big pitfalls are. So I'm happy to now introduce Rosen Ivanov. Rosen is married, father of 2 children, which is obviously his biggest and most challenging job. He was born in Bulgaria, where he finished summa cum laude at a high school with intensive study of English. Subsequently, he graduated magna cum laude in international economic relations on the University for National World Economy at Sofia, Bulgaria. He's been living in Frankfurt am Main since 2009. He's worked for more than 9 years, and at least 3 in a managerial capacity at Bulgarian National Bank. And then he moved on to work 9 years for the European Central Bank in Frankfurt am Main on issues as payment, settlement, systems, regulation, EU integration, statistics, and government debt, and other central banking topics. And he is now working on harmonization integrated post-trade services in the European Union, amongst others. He has presented viable solutions to solving the major macroeconomic challenges of our day on topics related to economic growth, monetary and fiscal policy, inequality, and the completion of the European Monetary and Economic and Social Union at the European Economic Summit in Amsterdam 2016, which was one of the CELOC's activities, as well as the first international conference on modern monetary theory in Kansas in 2017. He's convinced that many current and financial macroeconomic challenges can be better addressed by taking into account a biblical perspective. An example of this is a seminar on holistic management of personal finances, which he and his wife have developed based on biblical insights. So I think that's a very clear introduction of who Rosen is and where he's coming from and his great expertise in the field of finance and economy in Europe and elsewhere. So please, Rosen, the floor is yours.
Thank you. Thank you for the generous introduction, Johannes. So I'm going to start my presentation. So yeah, I've been with the Heidelberg Institute for International Studies and Leadership, where we had established a Center for Fair Economics and Finance. That's what I'm doing currently. What I'm going to present, though, are my own views. Can only confirm that what Paul was saying about the current global situation, it's really unprecedented, but also it exposes a system which is based on debt. That this system is dangerously vulnerable, even to a few months, even a month, or a sudden stop suddenly makes this system to be shown that this is extremely vulnerable to any kind of stops for whatever reason. And that, I think, is due to the fact that it is a debt-based system, ultimately. As Paul was mentioning, developed countries are doing fine for the moment. Most other countries not okay due to foreign debt and collapse in commodity markets. Eurozone banks have not been tested for such extreme macro scenarios where there was such a big loss of GDP or a rise of unemployment. So generally they're well capitalized, but we will see what comes out of it. And the more we wait and the more we try to, the more the economy is in shutdown mode, the more the liquidity problems are increasingly growing into insolvency problems for some companies. And all these bailouts, which countries are doing or central banks are doing, they're actually bailing out the shareholders and the bondholders. And then, but then the countries themselves may incur significant losses as a result of this shareholders and bond holders bailing out. It's kind of a Ponzi scheme where we need more and more debt so that we can keep the system afloat. Like we have to take so much more debt, as Paul was showing, so that we can continue to keep the system running, more or less. What the ECB is doing currently, Paul was mentioning that in addition to what to the asset purchase program that it is running, it decided to buy an additional 870 billion of worth of assets. Altogether 1.11 trillion euros this year. 80% of that would be government debt. Also, it extends longer-term refinancing for banks at -1%. Now, negative rate of bank refinancing for me is problematic because it really is a subsidy, direct subsidy to banks. Is this a good or a bad thing? I think it's not a good thing where you have such big direct subsidies to otherwise should be stable entities. On the other hand, also asset purchasing program disproportionately benefits the bigger economies because part of it, like 80%, would be bonds, which are normally most of the bonds eligible to participate in this program are issued in the bigger economies. as well as the countries which have a government debt, only up to 33% of government debt can be bought, so that this program is considered proportionate according to the European Court of Justice, which had to decide on whether this program is within the mandate of the ECB. So for countries which have lower debt to GDP ratio, lower government debt, actually they benefit less than countries who have bigger debt. On the other hand, the more assets the ECB is purchasing, the more it is assuming bigger credit risks. So what should the ECB do differently? For me, it is like we have to move to deleverage the whole system. And you deleverage the whole system by currently the option is for the central banks to buy directly government debt. And for example, there is this proposal of Mrs. Merkel and the French president to issue 500 billion euro of debt and then to distribute it to the EU countries. But I would say that the ECB could buy this debt, and also together with the non-Eurozone central banks, and then they could support transitional community employment of 41 million people at the cost of 1,000 euros per month. Basically, it's a program where you don't bail out so much companies, but really you bail out the people who are left, because we project that unemployment will rise. That's a given, but then we can do something about it, like direct job creation measures have been shown to work in the Great Depression. So why not use the power of the ECB and this money so that we enable people to have some kind of employment who don't have this opportunity, instead of bailing out companies and so on. And for the strategy review of the ECB, why not target 0% inflation? And also we have a floor of 0% of official interest rate, so that there is no this element of negative interest rates, or where the official interest rates of the ECB are lower than the inflation targets, which is for me also not fair to the savers. And then for the strategy review, the ECB could actually adopt some kind of form of monetary financing as a regular tool, for example, to finance job creation programs, because these are kind of programs. I will talk a bit more about them. That why do we need to finance those instead of other expenditures? But first, how do we reduce debt in principle, debt in the private sector? There is this accounting identity where it says that net private saving is equal to the public deficit plus the foreign income, and this is a well-established equality. I think introduced by Wayne Godley, a British economist, who actually was able to even forecast the previous crisis based on what he was seeing emerging from this identity. And here, out of this equality follows that the private sector can only save if public deficit plus foreign income is greater than zero. That's what it follows. So basically, in order to bring down private debt, we need to have public deficits and foreign income greater than zero. And that's sure maybe leading to rethinking of the Stability and Growth Pact, where in the long term public deficit should be zero, and probably could be supplemented with a different rule where public deficit plus foreign income should be at least 3% of GDP. So that would enable private debt to be reduced. Why should central banks directly support transitional community employment? The way I see it, but there are like many different ways to say this, like a job guarantee, transitional job offers, and so on, which is basically a scheme to offer temporary employment on local community projects for a minimum salary for all unemployed who show up and say they're unemployed and looking for work. For me, that makes full employment practically possible at any time. If the central bank commits to produce enough currency via buying government debt and so on, which would be necessary to employ all people who are unemployed on such projects, then you can have full employment basically. And also it would serve, such a program would serve to reduce poverty and inequality, because it's a bottom-up approach. This new money which central banks are going to create, they will start from the bottom, from those who are really poor, because not everybody would take this opportunity for this transitional community employment. And it would be usually poor people who are suffering. And if the companies are really, let's say, if they are viable as businesses, then this new money which are entering the economy from the bottom, they would be able to benefit from those. And then if companies are not viable, they just go bankrupt, and that's okay, because that's for the shareholders and the bondholders. They should have made their decisions better probably. Also, this kind of transitional community employment or transitional job offer has been endorsed by the European Parliament in 2007 as a viable measure. Also, it is better for inflation compared to guarantee income, because immediately people start to say, okay, but what about inflation with this thing? But inflation can be addressed in two ways. Basically, compared to giving money to people like that without actually asking them to do anything, it's surely better that you ask people to do some community projects, and they do something, and then the society gets something for this money. So, and on the other hand, also, when you launch this program, you also try to reduce the private sector debt. And in this way, you probably keep kind of the money supply more or less constant, because it goes up because of this program, but it can go down because the central banks could, via supervisory measures and so on, could reduce debt in the economy. And also what is really interesting is with this kind of program, because it has a really high fiscal multiplier. So the money that you invest, even if you cause an additional deficit, the money that you invest will cause a disproportionate growth of GDP. So basically the whole long-term sustainability debt, government debt actually rises, because you know, the denominator is rising. Yeah, GDP is rising faster than government debt, which finances this growth of GDP. So again, this is a bottom-up and not trickle-down policy. We know that there was this monetary financing back in the past, in the 60s and the 70s. It caused a lot of inflation, but it becomes more and more ineffective. We had to run bigger and bigger deficits. But with this program, it's very targeted. You target the people who really need it, the poorest of the people, and then you create this kind of stability, so everybody could find some kind of employment. And then it's totally different from trickle down. So the reforms necessary in the world of banking, I think Paul mentioned those, but I will also briefly mention this. Probably it's good to increase the own capital of banks, so that governments don't need to rescue them in times of trouble, such as this one, and probably establish a two-tier system of bank accounts, where you have fully guaranteed bank accounts with 0% interest rate, where all the money that are necessary to guarantee these accounts are with the central bank. And then you have non-guaranteed bank accounts with high interest, which then this burden of deposit guarantee on the public will be significantly diminished. And then all the savers, they have to make their own due diligence and decide which kind of products they want to invest in, or what kind of bank accounts, or with what kind of banks. They have to be more selective for their choices. Also, there could be support for smaller regional banks. Like in Germany, we have a lot of community banks where the savers and the creditors are both in the same region, and they are more or less exempt from such big crises. Also, mostly investment in equities, as mentioned, instead of debt, and also requiring probably bigger listed companies to have sufficient reserves to withstand temporary downturns of whatever character. It's not that I mean, like all the shareholders, they benefited because of this over leveraged position. But now I think it's not fair just to rescue them like that and just for them to continue to benefit. But it should be sure the company should have reserves, and then if they cannot withstand certain periods, then there is a way, as Paul mentioned, bankruptcy procedures where more efficient actors can take over. So that's my presentation. Thank you for your attention. I guess it's quite controversial, but I'm happy to reply to your questions.
So the question and answer session will be after all speakers have done their short presentations. And in that regard, I am most happy to introduce Patrick America, who is now invited. Yes, thank you for going online. Patrick, you're still muted, but you will be there in a minute. I urge all the speakers who come still to keep their time. Patrick is a Dutch entrepreneur with a background in project and interim management in the world of banking and insurance, from auditing and managing financial companies in the city of London, Amsterdam, the USA, and Germany, to become a member of the Antwerp Diamond Bourse and building Asian businesses in Singapore, Hong Kong, and Indonesia. So a real global experience in banking and business. Patrick's focus on delivering results for stakeholders while embracing social responsibility for orphans and homeless marks his career. Currently, he owns and manages companies in IoT and big data, as well as luxury goods, besides serving as a board member in Emmanuel Businesses Association and the Center for Economics and Mutuality in the Netherlands. About the latter, we will hear more from Arleen, but now it is my pleasure to give Patrick America the floor. Thank you so much. The floor is yours. Please share screen for your presentation.
Yes, thank you very much, Johannes, for the kind introduction. And thanks for giving me the opportunity to share a few minutes on my take on the post-corona vision for the economy. The introduction you already gave. Thank you very much. So let me jump into, yeah?
Patrick, could you also start the slideshow? Because at the moment...
I did already.
So from the first screen, if you go to slideshow and then...
You can see it now?
I think this... Let's hope this works. Yeah, now it works. Great,
now
thank
you.
Yeah.
Okay. Very good. Okay, yeah. Okay, so let me jump into the my short presentation. So before I go into talking a little bit about post-corona vision for the economy, let's look a little bit at what is already happening and what has happened in the past. So immediately after the pandemic started emerging, we saw this press release from the ECB announcing 750 billion euro emergency purchase program, and that sounded very good. Of course, it gives people the impression that help is on the way. But before we jump to conclusions too fast, let's look at the past and what happened after the previous crisis. And we can see that what happened, especially after the 2015 starting of quantitative easing, that actually very little happened to non-financial corporations. The graph that you see here, which is from the ECB website, from the Statistical Data Warehouse, it shows you the development of outstanding loans to non-financial corporations. And there you can see, I've put a red question mark. You can see that what has not happened immediately after quantitative easing started is that loans to non-financial corporations were not really increasing until quite a while. So the question then becomes, where did that money go? And so just to take an example, in this case, ABN AMRO, a bank I used to work for. So I have to say, I think it's a relatively good bank as far as good banks come. But you see here their balance sheet. And in December 2014, you see they had 700 million cash at the central bank. And then after quantitative easing started, that increased to 26 billion. At the same time, you see that their loans to clients did not really increase. They actually decreased a little bit. And now I've just added 2019 and 2020. And you see there that also there the effect, yeah, it takes a very long time for things to come to the real economy from the financial world. So the question really becomes, if we look at the EU Council regulation of October 15th, 2013, where they said that, okay, we're going to give more power to the ECB to restore financial stability and lay the basis for economic recovery. The question really becomes then, are the ECB and the banks accountable to achieving the goals that the governments have set out in treaties and regulations? And as I've shown already, you can put serious question marks there. So before we go into post-corona vision, let's take this time and look at what has happened in the past and learn some lessons from it. So going forward, I would say we have to understand that there is so much social unrest already that governments, national governments and international governments will be held accountable by citizens. And they should take charge to avoid the same issues as the ECB especially is unable apparently to come up with something better than the last time. And then the question becomes what to do. So the previous speakers already gave a lot of input on that. So from my perspective, first of all, I would say apply the mutuality principles also to banks. The Dutch Finance Ministry just sent out a letter saying that they expect from companies that they help with government funds that they should adhere to mutuality principles. And that's a very good thing, I believe in very much. But my point here is we should include the banks in this principle. And as I've shown from the previous slides, in the past, this has not really been the case. But in the future, after Corona, we should change that and make sure that they adhere to the principles of mutuality, that the community benefits from this community money. And the second thing that I would want to put forward is for the euro, I think one size does not fit all. We're going to have, in all this stress that is going on in the financial markets and economies right now, we're going to have the move to protect citizens' wealth on a national level. That is inevitable. So people fighting over pension funds and values of pension funds, that is just something that is happening already and is going to intensify. So, and in addition, national constitutions will require governments to act. And so I think that in addition to the euro, we should create regional community-based systems supporting the emerging knowledge-based economy. What am I saying? To put it simple, let's learn from, for instance, the Greek crisis. Before the Greek crisis started, the wealthy people and wealthy corporations moved their capital out of the country into the safe haven of offshore banks and banks abroad. That should not be the safe haven of the future. The safe haven of the future should be created by the governments that apply the rule of law, and they should be safe havens in the communities so that people, citizens in the communities know that they are being protected And yeah, it's just very unnatural to have a system where banks, outside of a lot of oversight from the government, are perceived as a safe haven for capital. So that is my presentation.
Thank you so much. Can you end the shared screen? Thank you so much, Patrick. Most welcome for your excellent input. I am happy now to introduce the next speaker, because all the questions and answers will come after all the speakers. And the next speaker is Timo Plutschinski. He is an evangelical theologian, director of the World Evangelical Alliance Business Coalition, and member of the wider World Evangelical Alliance leadership. He furthermore serves as a pastor of a Baptist church in Hamburg and as fellow at the Olivet Institute for Global Strategic Studies. Thirdly, is partner of MIC Corporate Finances, which provides, amongst others, a global M&A platform. Timo lives with his wife and 2 daughters in Hamburg, Germany, and has published 2 books in German language about faith in daily business life and political responsibility of Christians. Highly recommended reads. So, and for those who can read German, and I hope many can, because it's a great language. Timo, the floor is yours. Looking forward to hear your input.
Thanks a lot, Johannes, for the introduction to join and share a bit, especially about the business situation. As you mentioned, I'm leading the business coalition at the World Evangelical Alliance. So we are connected with various businesses around the globe and do observe the current situation. And I would like to focus very much on the situation of the small and medium-sized businesses, because they are very much under pressure due to this corona situation. And like in every catastrophe and difficult situation, you always have businesses who are doing well, and that's the same right now. So we do have, or can observe, 3 different types of businesses. The first group are businesses that will thrive. For example, if they are in the right sector, like healthcare, IT companies, tech companies, so they are doing quite well. Secondly, we have businesses that will ride out the storm, unfortunately, very much under pressure. And thirdly, businesses that will be massively affected, where we have to see where the journey is going furthermore. And that depends very much on the political decisions in terms of shutdown and lockdown and the next few weeks. So many businesses all over Europe and probably in other countries as well do have an average of 3 to 4 months of cash reserves, which is already depleting quickly. So there is a lot of uncertainty, and that is the worst case. I mean, if there is a difficult situation, business leaders are always used to deal with it and fight against and finding measures against it. But if they don't know what comes next in the next month, 2 months, 3 months, it's difficult to do the right measures. So there will be, of course, a financial need for these businesses. And especially in the Western world, we do have countries who have their support programs. In Germany, where I am based, we have for small and medium-sized businesses smaller loan programs given by the governments. We have short work money, so people can get 60%, and if they have kids, 67% of their income, although they are working less hours than normal. So that is a big support for the company owners in order to keep and remain their employees. But of course, there are other countries which don't have this kind of governmental support. So how do we probably create emergency investment funds to support businesses, help them ride out the storm and emerge stronger from the crisis? And that's a point I would like to focus on, because a catastrophe reveals always the best and the worst within the company, within your team, your business model, the whole setup. So what's happening at the moment at your company? So many business models are under observation and of course under examination. And the question to each business owner is how to deal with this, and what does this show? So we do need, of course, resilience, building in and beyond the crisis. And a real crisis reveals the lacks, the gaps, but also the hidden gems in your business model. And that's, let's say, the opportunity also business owners do have to have this crisis situation as a checkup. So from a Christian point of view, it's a kind of Sabbath situation, this lockdown. It forces us to really nail it down to the core of your business, and things are under observation much more than ever before. But in terms of the post-corona situation, the claim has to be building back better. BBB, building back better. So there is a huge opportunity to build back better, not just for singular business models, but the way we run our businesses, we run our countries, we run humanity. So where can we increase connections, networks, holistic thinking? We rely on healthy ecosystems. From a spiritual perspective, we have messed with creation very much in the past. So this is part of the problem we have to solve. So it's not just back to normal or business as usual or business as before Corona, but to deal in a better way, not just in the normal or used way. So how can business contribute to helping build back our relationships, our planet? So to foster a relational approach, a relational business. The business of business is, of course, not just business. It is a service, and business should be serving customers, employees, society at large, and creation. So we, of course, have now the situation for many small and medium-sized businesses that the debts and dependencies will increase. They fortunately could have some support programs by the government, but that, of course, with additional loans has to get paid back, and is increasing the debt situation for the single company. But on the other side, the last month and weeks have shown that the level of digitization increases also. So we do have, let's say, a force towards more digitalized business, more globalized business, more online. So all companies which were prepared to this digitalized situation did very well during the last weeks, and others who have, let's say, this paradigm shift to a digitalized business are very much under pressure to increase that way. So I would like to encourage business owners to communicate very openly to all stakeholders. It's, let's say, the golden rule in all kind of crises, and also now with the Corona situation, to be open with that situation, to probably over communicate to also to investors, business partners, and others. and then to see the opportunity for the business to grow. And to see, let's say, the hidden gems you have in your business. So thanks for joining. I'm looking forward to all questions and answers afterwards.
Well, Timo, thanks so much. I think that is a very clear perspective from business. I was thinking about all these small business, internet businesses that are selling, sometimes very durable products, and they're part of the business who actually thriving at the moment. Aside from those businesses who create soap and toilet paper. We are happy to now to go to the final speaker, Arleen Westerhof. I've known Arleen for quite a while, since I think it was 2012, I guess it was, yes. And Arleen is born in Jamaica and grew up in Toronto, Canada, so it's very broad experience already in early life, and she has a PhD in chemistry and a postdoctoral research fellowship in the University of London. So she is the only real scientist here, I'm mockingly saying. At least it's science that can be proven and tested. She moved to Amsterdam to work for a large multinational corporation. Arleen is founder and executive director of the Economic Summit, which is a great partner and member of SALUX, and the Economic Summit aims to provide solutions for the global economic transformation. Well, the same is basically, she is basically doing now in a new role in leading the economics of mutuality into the world of universities, and thinking about economy at that academic level via the Center of Economics and Mutuality, which has been opened at 9th of March 2020, and it was just before everything else closed down. So the timing was perfect, and it was prophetic, I would say, given the situation that we are in. So Arleen, I'm very happy to give you as a final speaker the floor. Please, the time, and after that we have the Q&A. Thank you so much.
Thank you very much, Johannes. And I just want to say it's an honor to be with you today. First of all, I want to say that even though we're working with universities, we're in a time where it's not just enough to have good ideas anymore. What's really needed at this time is good ideas that work and can be implemented. And so that's what we are focusing on. And even before COVID-19, the financial capitalist system that Milton Friedman pioneered was starting to show some serious defects. For those who are not aware of Friedman's financial capitalist creed,
I think that Arleen
the base part has become defective, and we desperately need as a world a system change with new paradigms. And I'm going to say that COVID-19, in my opinion, did not cause this need, but it certainly has accelerated it greatly. Why do we need this system change? Number one, because governments can't get us out of what's coming after COVID-19 on their own. We're going to need to see public-private partnerships start to emerge. Secondly, our economic system has switched. We're now living in the digital age, and a number of our speakers have talked about that. But in the digital economy, financial capital is less important than in what we were coming out of. And so I'm convinced that financial capital and its importance will continue to decrease in the digital age. A concrete example of that is Facebook buying PayPal a number of years ago for $19 billion US, whereas PayPal at that time didn't even have a revenue. What were they paying for? They were not paying for the physical things, they were paying for the network. of contacts that PayPal had. So different things are being valued differently now. And finally, why are we going to need to change systems? Because in the past, capital was scarce. Economics is a study of scarce resources. These days, we have new forms of scarcity that a system that only takes account of financial capital will not be able to address adequately. And so that's where the economics of mutuality comes in. Economics of mutuality uses the principle of mutuality or reciprocity or sharing to drive profit creation in businesses. And Timo mentioned it's not enough just to build back. We've got to build back better. I would agree, but I'd also say we have to build back differently, because the current system that we're using for business is not going to fuel profitability well that much longer. Economics of mutuality is a multi-capital business model that promotes sustainable, profitable businesses while also doing good for people and societies and environment. And so that is important. It leverages actually the power of capitalism, encouraging the concentration of different forms of capital into the hands of multiple stakeholders. And that is something that is going to help our economies, I firmly believe, and we have good evidence for it, to become more crisis-proof in the future. And in that way, it's also superior to the current form of financial capitalism that many businesses run on. Just really quickly, economics of mutuality based on the Old Testament principle of the Jubilee, which is actually an economic system that cares for the whole of society and the planet. It recognizes 4 types of capital: human capital, which is individual flourishing in a business context in the workplace. It recognizes social capital, which is the things that bring societies together. We desperately need that. And one of the things that we're starting to realize right now is, just like plants need fertile soil in which to thrive, businesses absolutely need fertile social capital in which to thrive. And so social capital is becoming increasingly important. There's a 3rd type of capital, natural capital, and we're not talking there about the output, things like CO2 emissions, but we are talking about the input streams. And that means that companies learn to operate more resource efficient. And finally, shared financial capital. And economics of mutuality recognizes and has developed a mutual profit and loss system of accounting, which runs via standard accounting practices. And that means all businesses can use it. Now, economics of mutuality is not new in the sense that the family-owned multinational Mars has been using it for many years. However, what's different now is that its value is beginning to be appreciated to create also a more ethical way of running your companies and running the economy. One of the key phrases in economics of mutuality is we look for profit optimization instead of profit maximization. And that works. Why? Because research done with more than 30 multinational corporations right now has proven that when you prioritize people, when you prioritize communities, when you prioritize natural capital, then the financial capital profit will always follow. And so it's becoming a very much more appreciated, recognized, ethically important approach to doing business. However, in order to implement it, we're going to have a massive shift in how we think about business. One of the shifts, for example, is we're going to have to move from being company-centric to purpose-centric. Every company actually has a purpose, and the purpose of the company is to solve the problems of people and planet. And the role of profit in the EOM thinking and situation is important because it causes liquidity and it sustains the business in fulfilling its purpose. And so we're looking now at purpose-centered businesses in which the business is just one of the stakeholders in the business ecosystem. It's also going to require that we think very differently about ownership of companies, but I will do that in a moment. I'm going to try one thing and I'm going to see if it works. And that should be all right. And we're going to do it like this. And I think you can all see the slides that I've got right there. I'm going to illustrate this really quickly by just using a case study that was done not so long ago on one of the multinational companies. It's Novo Nordisk. It is a Danish pharmaceutical company, and they have adopted the paradigm, the economics of mutuality. Essentially, their statement on the slide, you can see it, is no one organization and no one company can solve the challenge alone. Their mission is to change diabetes. So they've gone from being a pharmaceutical company that sells drugs to combat diabetes to actually changing diabetes. And so no one company can solve the thing alone. And so the program that they have initiated is called Cities Changing Diabetes, and it's built on public-private partnerships between businesses, city leaders, planners, architects, healthcare professionals, etc. And so in the diagram, you can see the two rings of stakeholders, and the purpose, changing diabetes, is at the center of all of that. Now, Novo Nordisk set themselves a target because one of the things that the economics of mutuality does or has going for it is that it is very measurable. And that's very, very important in the world of business. And so Novo Nordisk set themselves the target of changing diabetes by changing the rule of halves in diabetes. The rule of halves, and you can see it on the diagram, says that everyone who gets diabetes, of those, only half are diagnosed. And of those that are diagnosed, only half ever receive care. And of those that receive care, only half achieve treatment targets, which is having it under control with medication. And of those, only half achieve the desired outcomes, which is that they no longer need medication to control their diabetes. And so they initiated public-private partnerships with supermarkets, getting them to sell less sugar containing drinks, fewer sugar containing drinks. They initiated partnerships with city planners for more parks and for more gyms and places where people could exercise. This is very, very different than the usual way of doing business. And it's also counterintuitive, Novo Nordisk's approach. Why? Because if you're a pharmaceutical company, the logic would say that you want as many people as possible sick in order to increase your market share of the drugs that you sell. But the results have been very staggering for Novo Nordisk. And essentially what they've done is they've capitalized on the social capital factor of trust. And they've built trust throughout cities. And essentially the results are, in Cities Changing Diabetes program, is that their financial revenue has increased significantly. They have increased their market share, and local medical authorities are actually advocating the use of, or on behalf of, Novo Nordisk. And so this is just one way of showing that and proving that a company can do well by doing good, and that it does affect the bottom lines, but there are multiple bottom lines that it affects positively. Lastly, the economics of mutuality has been shown to be now so successful that, as Johannes said, on the 9th of March this year, we opened the Center for the Economics and Mutuality in Rotterdam at the Erasmus University. I'm the director of that center, and we've called it Economics and Mutuality mutuality because the center is there also to promote mutuality as a guiding principle that can be useful in helping to shape all of society, not just business. The center is a partnership between the Erasmus Initiative for the Dynamics of Inclusive Prosperity, in Economic Summit, which is also the organization that I lead. We also are working together with the Rotterdam School of Management, which is in the Dutch Parliament, and their job will be to study the legislative changes that are required to enable companies on a large scale throughout the nation to be able to employ economics of mutuality practices. We, as the Economic Summit, will focus our efforts on helping startups and SME sector companies to start to practically apply the economics of mutuality in their business practice. And the Rotterdam School of Management will focus on redefining ownership in companies. But one of the other partners, and I do need to say that in this initiative, is also the Economics of Mutuality platform, which is based in Geneva. And one of the fun things that's happened very, very recently, even as recent as last week, is there is now a network of business schools across the continent that is starting to develop, or at least be allocated specialty areas in the whole economics of mutuality sphere. Rotterdam School of Management, as I said, will focus on redefining ownership. Oxford University's Business School will focus on EOM accounting and purpose-centered businesses. And the Institute for Graduate Studies in Geneva, Switzerland, will start to focus on finance according to EOM principles. So thank you very much for the time. And Johannes, I'll hand it back to you now.
Thank you so much. I would like to ask all speakers to go at least on video on screen again. Thank you so much. Thanks all. So the idea is now that there will be some questions. Actually, I already have some questions. So I will start right away. And for those who think, oh, these presentations all took so long and now we get very long answers to each question, I implore to all the speakers to give very short answers to the questions. Now, one question that I got from Bert Dor is the following, and it is a question directed to, oh, by the way, those who are not in Zoom now, they can ask their questions either by posting it on the comment section on the Facebook post, and I believe also on YouTube there is some option to ask questions. Okay, I see now that there may be some technical difficulty there, but perhaps there is a way, and if not, we're very sorry. And you can also even email them to Salux via info@salux.eu, and we'll try to incorporate that in some way. So the first question that I got actually was a question that was a very good one from Bert Dor. It was a question directed to Rosen. It's a very simple one. Why not start with a basic income for everybody? Why connect it to job creation by the government? So your 1 minute answer to that one, Rosen.
Yeah, I mean, we start with the Apostle Paul, who said, those who do not work shall not eat. I mean, that would be the short answer. I mean, like, you cannot just have something on the back of everybody else. On the other hand, you want this, even the job guarantee is not a perfect solution, but of a lot of imperfect solutions, how to introduce more money into the private sector. This is a better one, because also it's less inflationary, because basic income, the people who receive it would not create anything, just add to the aggregate demand. So in a way, like job guarantee is less inflationary also. There are many other aspects, but I'll limit that here to those two ones.
Very clear, very clear. I have also, so there's many questions also on the green economy and the greening of economy, but there's just one theme, and this is clearly coming out in this last question that was asked, like, okay, how can we get, and this is also the common theme of all the speakers, how can we get the money back to the people? How can we get economic power back to the stakeholders, to the people who are the economy? So, and how can we make sure that stimulus packages go to people and businesses instead of just staying there in the banks and in the financial sector? So these are some of the core questions, core themes that are reverberating, that are going on in these in all these presentations, I think, and I think that the presentation from Arleen really summarizes it. Okay, where we go to now. That is, so when it comes to the questions on the green economy, so there is a question from that says, okay, could we support establishment of social energy cooperatives to be part of the solution, in your opinion? I think that is pretty clear. I think that should be a question to Timo, actually, because that's a business, right, Timo? I mean, social energy cooperatives be part of the solution, in your opinion. Is this part of the new economy?
Yeah, of course, or let's say in addition. So we, let's say, have, or I need for a broader measure, broader standards of business. It's not just the financial benefit. It's not just the profitability in terms of more money. But if you see the definition of sustainability, it's also the social aspect, it's the environmental aspect, and if you see it from a Christian point of view, it's also the spiritual benefit of a certain investment. So it will, let's say, lead us into a broader sense of the success of business, not just focusing on financial measures.
Very clear. I would also add that it's very mutual, because it's really getting people work together for the greater good, and delivering a concrete service, because we all need energy. This is obvious. So I have a more general question from Josias Conradie. It's more in the same line, but more general formulated. And I would like to direct that question to Paul Mills. So many people see the crisis as an opportunity to reboot the global economy, and also to care more for the environment and reduce climate change. What is your view? How can a greener and more equitable economy, global economy, be facilitated? So what's your take on that, Paul?
Yeah, well, this is where I'm going to get controversial, because if you actually do cost-benefit analysis, even if you believe CO2 has a significant impact on global temperature, which I don't, it might have a marginal one. Even if you believe it, you basically got to shut economies down to get to net zero emissions, and that then has very little impact on global economy, global climate for a long, long time. So I would controversially say you've got to distinguish between the fixation with CO2 from how do you improve environment, how do you not pollute, how do you protect habitats, and so on. Air pollution has not gone down in cities as a result of the lockdown. CO2 globally has carried on going up because it's mainly a natural phenomenon. So if you go to the Mauna Loa data, it's continued to rise at the existing rate because it's largely a natural phenomenon. And if you look at, as I mentioned, we're into a solar minimum now, and we could be cooling quite rapidly, just as we did in the 1970s. So I would strongly distinguish between environmental improvements in terms of protection of habitats, recycling, taking care of resources, and moving away from the CO2 fixation, because it will lead to higher energy costs that are going to hit the poorest most, and it is destabilizing the power grid. So we're going to likely have sort of blackouts and power interruptions on a regular basis as a result of this. So I would challenge the whole premise of that, but there you go. If you want to actually do it financially, you've got to either get a proper carbon tax established. Carbon permits would do much the same thing, but the markets we've had thus far have not worked. We've not set them up correctly. So from a microeconomics perspective, you've got to be serious about a carbon tax.
So the carbon tax would be the answer then, but then of course there's a difference on yes or no climate change and where it's coming from. But actually, Paul is giving an answer to the actual question, which is that a carbon tax would then be his solution. Does anybody of the other speakers would like to comment on that from who has perhaps a different take of on Paul with regard to climate change? Arleen.
Yeah, Johannes, indeed, I put my hand up. Interestingly enough, Kate Rayworth, an Oxford University economist, offers a different perspective on that in her donut economics theory. And it provides a path forward for growth, respecting both the ecological ceiling of planetary degradation and also caring for the needs of people. And donut economics actually is, let's just say it supplements the economics of mutuality. My city, Amsterdam, we will become next year the very first donut city on the planet. And so the reason why, say, donut economics supplements the economics of mutualities, donut economics gives a big picture thing for policy statements and regulation, and the economics of mutuality gives the matrices and the measurement things for business, which also has to be involved in that in society. So I have a little bit of a different perspective than Paul, but up until now, it looks promising.
Well, I love donuts, but this type of donut economy sounds indeed very, very promising concept. And as people can see, even if you have different takes on the origination of climate change, we can all agree on reducing pollution and reducing all kinds of pressures on ecosystems and the environment in general. I have here a question again for Arleen. I would like to I'll direct this question to Paul because both Paul and Arleen spoke of the Old Testament concept of Jubilee, but what would that look like in practical terms in the current world? In blunt terms, in typical Dutch question is who will be paying for it? So asks Paulus Steenkamp. Now, that's a very good one. Paul, who will be paying for it?
Okay, well, Jubilee is the institution in Leviticus 25 of release of debt slaves and return of the land traditionally to its familial owners, they've having leased it out because they're poor. Perhaps more pertinently is the year of debt cancellation that was every 7 years, not every 49 years. So the Jubilee was a sort of a Sabbath, 7 times 7 of debt cancellations. Who to pay for it? We don't have the idea of debt cancellation other than through bankruptcy at the moment, either personal insolvency or corporate bankruptcy. We don't have an institution where this happens. Don't forget the Old Testament law pre-announced debt cancellation. So lenders lent money on the basis of they know when the year of debt cancellation is coming, and therefore if they can't afford it, they won't lend. And Moses, interestingly, even addresses that question. So the nearest equivalent we've got is personal bankruptcy. That's why I mentioned very briefly in my points about maybe what we've got to do, rather than just load up companies with more debt that they won't be able to pay back eventually. Do governments in this process restructure the balance sheets of companies as they have to rescue them if they should, and then go in as an equity taker, restructure the debt stack so that the debt of the company coming out is sustainable. Similarly, you might, to avoid mass mortgage foreclosures and house repossessions after this, as unemployment goes up rapidly, people default on their loans and so on, you might want to institute a fast-track personal insolvency regime that quickly reduces people's debts and avoids foreclosure to reflect their new incomes. Now, of course, who pays for it? It's creditors. If it's a bankruptcy process, and so this is both banks if they're holding the mortgages. That's why they need to be capitalized. That's why you need to ring fence banks in this way, as Rosen also talked about, so that banks can actually take these credit losses and pass them on to savers who have taken these risks. The problem is we didn't reform our banks long ago. Otherwise, it's pension funds and insurance companies who are holding corporate bonds and mutual funds who would suffer. But that just means a wealth hit to long-term savers rather than loading the debt onto taxpayers.
Good enough. Thank you, Paul. That's a very clear answer. Actually, I would then have one other question, but I would like first to ask Patrick a question based on what Paul just said and what has been coming back and back again is the need to reform the banking system. You've made some proposals, but I don't think that's all that should be done, right? I mean, I guess there is much more that should be done to ensure that while there is money coming from the ECB, as you described, and it's not going to the real economy, that more should be done, I guess, to ensure that banks reform and that the money is going to the real economy.
Sure, absolutely. Yeah, that was what I thought I would share within 10 minutes. So a lot more needs to be done, obviously, but you know, I think one of the key things I wanted to stress is that I think we need to strengthen the governments because the fact that money from society is being held up in capital markets with banks and is not going to the people that have actually helped build it up is inequity. So what needs to happen, in my view, is that the role of governments in managing the capital needs to increase, the regulatory role and the oversight role. And yeah, we really need to break through this paradigm that we have to outsource the money management to a group of people who have proven now that they are not able, even in the face of big crisis, to apply standards of mutuality. And so I think with the Dutch finance minister saying any business that receives government funds should adhere to these rules, I think banks should not be exempt. So let's make a start with that. Yeah.
So if banks get money from the ECB, they should adhere to a certain set of rules that ensures that the money goes to us, and that this is actually a matter of democracy.
Absolutely.
A matter of well, people power, not in a populistic sense, but in a very fundamental sense that
correct.
People will pay for the system and should, you know, have a say and see something back from it. Otherwise, it's all there with this happy few. Thank you so much. It's clarifying. I think it's very necessary that this point is emphasized again and again, because we see how strong the lobbies are from the banking industry. We had just a witness from our Dutch MP who told about this in a legislative process, and she shared this with everybody on Facebook, Stineke. Stineke van der Graaf, she told about how big banks and big finance pressured on legislation regarding insolvency and try to get even more money to that. And while we actually, and she managed to do that, we actually need to see things develop the other way around. That SMEs, business, and people get the money they need. There's a final question. There's a technical question. There's a technical question from Beers Green, was asking, can we have breakout groups to allow for more participation discussion on some of these topics? Yeah, we are working on that. So Beers, thank you for joining us. And yes, we are considering to split up some of these issues in more specific, smaller webinars. So yes, great. Now, Robert, I hope I pronounce this correctly. Robert Harutinian, he's asking a very important question. I think I will try to direct that question to Arleen, actually, is do you anticipate changes in people's consumer behavior? It's also a question for Timo. So could you both, 30 seconds, very quickly answer these questions? Because I think it's a very important question. Do we expect people to change their consumer behavior? I'm obviously not referring to panic buying of certain goods, but you know, on the long run.
I do expect certain changes in consumer behavior for two reasons. Number one is that it's already been shown that in times of economic downturn, for example, the financial crisis of 2008, you know, our behavior changed, our spending changed just because of the pressure on that. That is one thing, but let's put it like this. I would hope that after COVID-19, that our governments and the ad industry would start to tell a different story, create a different narrative, because the behavior that we've seen a lot is based on the economic concept of Homo economicus, which is the economic man or person who just lives to consume or to fulfill their desires, and that is buy. And many of us are seeing that that is not a viable way forward. I'll just leave it at that.
Timo.
Yes, I agree. Also to Arleen, and consumer behavior is always changing. So it's a question of stimulus and time. And if we see the last weeks during the lockdown, people were very much focused on their families and households and what they really need. So I think, yes, there will be more sensitivity on what do I really need, what do I buy, where do I invest, where will my money go? So yes.
Thank you so much. So that is indeed a very, very clear answer, and it clicks in what we are seeing already, and also what Paul said. Paul mentioned correctly that there is a lot of negative trends that are now exacerbated. I would also say, slightly on the other hand, to mirror that, there is also some positive trends that are now being reinforced, and at least in terms of mindset and how we think about economy and of the need to have a more, essentially, to have a more democratic economy. If I summarize what we have all discussed, as we already said to one of the questions, is we intend to have more of this and more in-depth and shorter, precise webinars. We will discuss that as a team. I thank also Christian and Gabik again for supporting the technical process and making sure that this all happened. I thank the attendees for their presence and for their questions. And of course, last but for sure not least, I thank all the speakers for their excellent contributions and really thought-provoking and really in-depth. And I also got already these comments from the from in the Q&A that I didn't repeat all, but there is some people who already said, oh, thank you so much. It's so valuable insight. So I think you can take that home. I think thank you for helping us in making this happening. We are coming to the end of this. We will, based on this, have a short publication. As you could see, this has been recorded, so it will be published again on Facebook, on YouTube. We have the record there, so we will be there. I know that, so for example, there are people from Australia who would like to see it, so they will have the opportunity to do so. And for them already, thank you for watching this. When I talk about publications of Salux, of course, I am happy to basically, to encourage you to look to that and to look to our free downloads and to look to our bookstore that you can all find on salux.eu. And there you can see some of our work and publications that are already there. So warmly invited to do that, and also to sign up for our newsletter and stay in touch. And also, and especially, I would encourage everybody who has been participating and who has been watching and who will watch later on, to take the message back home. And as I said, we will make a short publication also based on this, on a free download, and to encourage really people to take this message home, because we need to change the thinking on the economy for the greater good, for our people, for our planet, and our future generations, in order to have a more livable and sustainable world in the future. And of course, we hope and we wish that when this crisis is over, some people have, in that sense, learned a lesson, and that we can move forward towards a better business and a better economy in general. Thanks again, everybody. I will now ask Christian to close the session, and wish you all a very good day, and we'll stay in touch. Thanks so much.